Hey, what's going on, everybody? Decent week. This past week, I've had obviously one red day and then 3 green days. I didn't place any trades on this Monday, but finished the week off $2,263. Pretty decent there, and it's all done based off the same setups, doing the squeeze setup and using the 10x bars, and yeah. So I was going to get started. All right, so I traded Chewy twice. I had a day trade right here that ended up stopping out for a small loss. But then I went back and put on a 3-day swing trade on it. Open FSLR, closed Tesla, and Spotify for a loss. So on the day trade, what I was doing is I was wanting to play the 1 hour squeeze setup. So here's my 1 hour chart. So right there, like it's boxed off. Those red dots mean there's a squeeze. These green candles right there mean that there's early in signals are being signaled. And then on the daily chart right here, you see that the momentum's starting to shift higher. So I was thinking I get in a short-term swing trade or a short-term day trade with it. But what ended up happening, and here's another thing, like, so this is my multi-squeeze tool. So right here, all those boxes, if they're red, black, or gold color, that means they're in a squeeze. And so I was looking for the 1 hour squeeze to fire so I can make a quick profit, because right here, as you can see, all the bullish momentum is right there in all time frames. Anyways, what ended up happening is right here where it says I exited on this candle right there, obviously, like the arrow shows. And the momentum in the market was shifting lower, and this obviously started to decrease. It got back below this orange trend line that I have right here. Price got back below it. So then I went ahead and cut it. It obviously worked out, but at that time, it's easy to say now for all, if I wouldn't have exited, it could have just kept falling down. Which it obviously didn't. But anyways, small loss right there. Oh, rambling on about it. I bought the calls for $5 and exited for $3.70. So small loss. All right, I'll just cover them when I close them, so we know. So we'll go over Tesla. All right, like it says, entered a 9 days to expiration iron condor for $1.55. So the setup here, if you're not familiar, right here, this is the weekly wires indicator that I use. Where is it at? Okay, the indicator starts right here, and then it goes all the way to the end. So in a rolling 2-week period, this indicator analyzed 263 2-week periods, and in those 268, basically 5 years, I was using this right here. So the price closed inside H2 and L2 222 times, which is 82.5%. So H2 and L2, here's H2 up here, and here's L2. And then H1, L1 is actually right here. Actually, you know what? This is H1. H2 is you kind of see behind that about right there. It's way up here. So anyways, I use that as a way to gauge where our price is going to be. So the thought process here was it already spiked below H1, so I was looking for it to revert higher. But in the short time frame, I did not expect it to break that high right there. So to continue on the thesis that price will move sideways, there's no squeeze. Oh, sorry, that's the weekly time frame. There is a squeeze on the daily, but it still has a while to shift up. And it has been moving sideways at the time. Right here I have yellow 10x bars. And the thought process here, if you're not familiar with the iron condor, is that price to move sideways. So right here I sold the 460 call and the 395 put. So I want price in between those prices going into the expiration date, which was 9 days away. So yellow 10x bars means that price will move sideways. And you see these green lines that I have right there and right there. Basically, I would just want price to move sideways. Doesn't matter where in there, but just in that time, or in that zone, if you will, the range. So yeah, so I just to quickly recap all that. I was looking for it to stay above this line right here and not break this high. And I sold the strikes outside of the Bollinger Bands. But what ended up happening, there was that news about Tesla joining the S&P 500. So it gapped all the way up to that peak, actually, to 460. Which is where I was not expecting it to break. And luckily it drifted lower and I closed the position for a small winner instead of it blasting out of the top part. So anyway, small winner, like it shows right here, after commissions made basically $108. So when it happened when that news came out, I shot up right here to 160, so that resistance line held and it drifted lower and then I got out. So that's Tesla, small winner. Got lucky on that one with the news. And Spotify. This one closed, I got stopped out, but it would have been a winner. And it's kind of frustrating, but that happens with trading, right? So just to show what happened here, I wanted price to move sideways like this again, just like on Tesla. It dipped down, so I stopped out because I didn't think we would break below, or I did not want us to break below this candle right there. But as you can see, it went right back up and it could have been a winner. But it's easy to say in hindsight because you never know if it is going to actually bounce back. So anyways, go over the setup. So no squeeze. So that makes me think sideways price action. Once again, I use the weekly wires chart. So like it says right here that I documented in my journal, I was looking for it to close, not break this high, which was H1. And then I also expected the 50 SMA to hold a support. We did end up breaking that because this is the day I entered the trade, and then we did end up going down, and that's when I stopped out. We got back below the 50 SMA, so that was my stop, as it says right there, and close the position for a loss. And also, once again, I don't do iron condors unless there's yellow 10x bars, and there is. And just so you have a better visual representation of what I'm looking for, I needed price to stay between these blue dotted lines. All right, so that's the red day. My $700 and we'll say $60. All right, Wednesday. Say open NVIDIA, open Lulu. Like I said, I'll just go over what I closed. All right, Facebook. Small winner, like it says right there. About, say, roughly 165. That was mainly because of, if the setup changes, I get out. So this is the day I entered, right? So Facebook, here's the daily chart, weekly chart. We had this big, basically dragonfly doji, basically. Moving averages are stacked, positive, momentum's above zero, it's in a squeeze. So I was looking for price to stay above there. So actually I should probably say what the position is. I'm sure if I... Alright, so I was in a 272.50, 267.50 bull put spread. So in the easiest of terms, what that means is I need price above 272.50 by November 20th. So to go over the setup again real quick, stacked EMAs of the daily squeeze, momentum is above zero. Got larger time frame squeezes, like the weekly, 3-day, 2-day, and daily. Bullish momentum in the lower time frames. Yellow 10x bars, which is okay whenever I'm playing a squeeze. And you can kind of see that there's kind of a channel here, so I was expecting price to... so I hit right there, looking for it to drift higher right there. Oops. All right, so this is the day I closed the trade. All right, so it did, you see it did go higher sideways. Here's my break-even line, which is that blue dotted line. I just needed a price above there. But the reason I closed it early is because the red candles. Momentum is now turning red, so therefore it is making me think price is going to go lower. Basically what you need to do, the reason I follow it is because the probabilities are no longer in my favor to continue higher. The probability is it's going to turn lower, especially with a shorter term credit spread. Your losses could be larger than you anticipate if it's short at expiration. So anyways, that is the reason I got out, because momentum was shifting lower, and therefore I got out for a small winner and could even... Let's just take a look to see if it did. If it would have stopped me out. So yeah, I would have became a loser because the price got back below my break-even point. Oops, there, that's what I'm looking for, sorry. So I exited on this candle, and it did drift lower. Anyways, what I'm getting at is a good stop out. That's what what's really good about the squeeze is once you see that momentum is changing, it's best to go ahead and get out, and then you don't have to worry about it. So anyway, small winner. And all right, Salesforce. Same thing, another thing with the squeeze. They're all squeeze setups. Very easy to do. All right, computer is moving slow right now. All right, anyways, daily squeeze with momentum going positive right there. So we have 3 black dots. Momentum is turning bullish. Price near the 21 EMA. And I'm looking for it to shoot higher. So that's all it needs. And so I did a 252.45 bull put for 160. So we do have multiple squeezes and some of the larger time frames as well. Looking for all these to fire and then fire these bigger ones. But with it being a shorter time frame squeeze, you don't need it to fire all of them. All right, point of control. I know this is the first one I'm showing it in this chart. So that blue line and this blue line, that's where the most volume has happened for the month. So basically that's where liquidity's at. With liquidity being there, it basically acts as support or resistance because there's either a lot of sellers there or a lot of buyers there. So with it closing, with that candle, I was expecting price to hold up. If it would have got below, I would have closed the position for a loss. So I have my EMA stacked positive, VWAP is stacked positive. Price was consolidating around the $250 level, and it was also holding up the 382 fib level as well. Anyways, I closed it for 87% of the credit. I was risking 200 and made take home was about 546, 547. Saw a little trade there. And actually so you can see how the squeeze plays out. So if you're not familiar with the squeeze, I entered on this one when price was at the 21 EMA. Still hasn't fired yet, but momentum is going higher. These green dots right there mean that's early in signals, meaning that it's about to fire. The squeeze is about to fire. When it fires, when it goes green, that's when we'll say, by definition, it is a greater than expected move is about to occur. And so anyways, yeah, the short term, it was above 250, went up, and got out. Now this sounds kind of a little bit repetitive, but that's just how easy it is. Just have a few setups you're good at, and just keep doing them over and over. All right. All right, I'm in Twitter, FedEx. All right, close Chewy. All right, this was I was only in it for 3 days. I got in the credit spread for $1.10. And this was a bull call spread, so a debit spread versus a credit spread. And same thing, momentum is shifting positive. The 1 hour, I was playing the 1 hour chart. So all decisions will be based on the 1 hour chart because it's only 3 days till expiration. So, and you see this little trend line, it's like a little flag. Price above it, entered. Once again, lots of time frame or squeezes on multiple time frames. And then on the 5-minute chart, you see we're above that trend line. This trend line is that same one that I have right here. So we're above it, we're breaking out. You can see right here, this chart. See where I entered, see where I exited. So yeah, that was it for Chewy, FSLR. This is a 10-day bull call spread. This one was a little bit different. And the reason I say that is because I see it as it's in a range right here. It's on support. Early end signals are coming in. But momentum is still red. Like it very well could have turned against me, and I acknowledge that. But that was a risk I acknowledged prior to entering. And then the next 2 days, it went up, hit the top of the range, and I closed the position because that's where the 382 fib level is. There's also this resistance from the prior, and just took my money and ran. Got a lot more to say about it. Closed NVIDIA. This one was nice. If you're not on my Instagram, go ahead and look up Instagram, or go to Instagram and look up active profits. I have a little highlight in there that explains how iron flies work. But this is for earnings, and I did an iron fly, which is where it's basically an iron condor set, except you sell the same strikes, which in this case was the 540s. And I got $24.22 of credit, and this explains or my Instagram little highlight thing explains how the iron fly works and everything. So you can go ahead and check that out. But basically what happened is I got the expected move. I set my break-evens right at these fib levels. So the 382 and the 786. And I don't have how it closed. But anyways, what ended up happening, it stayed within the expected move. It's explained much better on Instagram. You go check that out. But anyways, to stay within the expected move, I was able to close it for $13. I sold it for $24.22, and I sold it for $13. And made a little over $1,000 on one position. All right, and last but not least, Friday. Closed Lulu. I entered a 9 days expiration. I did not enter a 330 gold put spread. I entered, what did I? 330, 335. All right, so that's a typo on my end. I need to go back and fix that. Anyways, the close was at 32.50, and I closed it for 70% of the. I closed it for a 70% return, and because it was approaching the $350 price level, and I made a little bit over $350, basically $550. And so what was the setup? Same thing's in a squeeze. See the blue right there? Momentum's turning positive. And I was wanting it to get above this trend line as well. That was what I was looking for to happen. All kinds of squeezes right here. You see my multi-squeeze tool. Yellow 10x bars. VWAP was stacked positive, and all the moving averages were below it as well. See, they're all right there. So I just wanted above it. Now I was looking for it to break this trend line and go higher. All right, and here's when I closed the position. I closed it for 70%, like I said. So still in a squeeze, momentum's going higher. And then you see it broke the trend line and kept going, but it hit the 350 level, and I closed the position instead of holding it into the end of or into next week. Just walk away with it. So, yep. All right, so that's all of, let me fix this real quick. At 330, 335. All right, so what's next? Now, let's go ahead and look at some sectors real quick. So the way I look at sectors is that I go over here to FinViz and you click groups, which is right there. And then you can select sector right there. And then you could basically look at how everything has been working from a 1 day perspective, 1 week, month, quarter. And something that is interesting. So since the election, energy, financials, industrial has always been strong, but the ones I find the most interesting is energy and financials. They have popped quite a bit since the election came to an end, kind of at an end, whatever you want to call it. And tech was a leader. Like if you look at the half year relative performance, it was at the top, or it's still at the top, but it was pretty much up there. But now it's starting to get knocked down. So anyways, that's how I look, and then I usually look at the 1 month perspective. So I come over here, I look at the 1 month performance, and then from here I go look for stocks in these sectors that have squeeze setups or any type of setup to trade in there. So like I want a really strong stock in a strong sector. But to be honest, I am not going to touch energy or financials just yet. I feel like energy has a lot of overhead baggage to clear before I'm going to go long. I'll just go trade something else. But what we can do now, let's go ahead and let's look at some sectors here. All right, Biotech. See, it's above all its moving averages. Looks like it's trending higher. I could go moderately bullish on that. Telecom, I say sideways. Utilities, which is known as a defensive sector. See how it responds. It probably will, I say probably sideways. And materials, just consolidating at the top of there near 70. Healthcare, that should be an interesting one to watch with the vaccine news coming out, things of that nature, but I still say sideways. Semiconductors, bullish as always, still going up. I would wait for a pullback before entering one of those. Consumer discretionary, I say sideways to up movement. And something to really, I think we should pay, like every trader should pay attention to, is all the sectors that jumped on the news of Biden basically winning this election. Those are something to pay attention to. So like energy, my guess is because he's wanting to ban fracking and whatnot, so therefore the price of oil is going to go up. So therefore the energy sector is going to go higher. And me personally, I want to see price above this purple line before even entering. I want to see a break above, pull back, retest, then go. Because it has just been a big short for so long. And let's see what, I haven't looked, see what oil's doing. Same, see, it looks just like the energy sector, same thing. I would want to see it above the 200. But anyways, I'm going to leave it alone. I'd rather trade something else. The consumer staples, kind of hitting a double top here, probably a pull back, maybe sideways. Betting it probably just stays in between that little range right there for now. See real estate. That also looks pretty sideways until it breaks above it. XLF is another one that gapped up on the Biden news. I don't know. See what happens. It seems to be basing off of this support line. See if it holds and it goes higher. Might just be waiting for these moving averages to come up here, up higher, and then before popping. Industrials also kind of popped, but they were already strong anyways. And we're back up to all-time highs, I believe. Is it right here? Now, let's see if it holds. But anyways, definitely looking bullish. Transports, bullish. And tech. And there's I'll go over here in a minute. But tech, a little bit worried about. I think it might pull back because Amazon is looking like a short at the moment. So you do have that range that it's in. See, it's probably just going to go sideways or who knows, maybe break out, but we'll see. Anyways, those are the sectors. Basically, what I am sticking to is I'm staying away from energy and financials. I'll be looking for some shorts in tech more than likely, and any of the other stocks that are just consolidating, like healthcare, I wouldn't mind trading. Consumer discretionary, it's just consolidating, so I'll definitely be playing or looking for squeezes in those. And those sectors. But now what I do have my eyes on right at the moment is one would be Amazon. So it does have yellow 10x bars, and so the white line right here, the one that's going down, that is the 20 SMA, and the purple one is the 34 EMA. Prices below it. And the reason I am looking at shorting it is right here. So let me go ahead and erase that. So it's not looking very good. So it's below the 21 and 34 EMA. Prices consolidating. There's you see these green dots right there. That means an early end signal, meaning it's about to the squeeze is about to fire. So we're in a daily squeeze, which is these black dots. Momentum is below 0, which is why it's yellow, and now it's red, which means typically shows momentum is about to go back down. Like you rarely get a solid color than or a red than like a bunch of yellows again. That's a rare thing. So anyways, and another reason is every single time frame right here is bearish. Momentum is red on almost every single one of them except for the 30. But that's probably just a small little... No. See, it's not a whole lot. It just looks very bearish now. So if we can get a pop up to about 31.50-ish, I'll be looking to short some calls on Amazon. And then watching Home Depot looks like a head and shoulders. Just like the other one, it's in a mid-compression squeeze, which is these red dots. Momentum's below 0. And it looks like an inverse head and shoulders. I don't think this app lets me draw on here. Okay, it does. So you got your shoulder, your head, your other shoulder. Here's your neckline, this red line right there. If it breaks below it, it can go down, but there's also this trend line support that's right here. So if it breaks that, I think we could go down quite a bit, and I think that will also bring down the market. At least test 255-ish to 250 on Home Depot. But we'll see. But I want to see a pop, either break this trend line or pop up to around 275. Short, and the other one is eBay. I know there's a lot of shorts right now, but that's what I am finding in the market. So you can see that it is kind of in a channel down below the moving averages. It came right to the 21 EMA, closed at its low, and I'm looking for it to come back down to test near, we'll say, 45-ish. And it actually has red 10x bars instead of yellow. Everything's either yellow and a few greens, but this one's actually red, indicating momentum is to the downside. And you could probably do a short term. Let's see here. Here's a 20-minute squeeze, 15, 10-minute, and an hour. Maybe even be able to play the 1 hour squeeze on this going into Friday. So on the 4 hour chart, what you can do is so it's up, the momentum starts to slow, it turns dark blue right here on the 4 hour. That's when you get into some shorts indicating that it may go back down. It's just what it's looking like. I'll keep my eye on that one. And that is it. That's all I have. I hope you found this video helpful. If you have any suggestions, please leave them in the comment section down below. I feel like I kind of ramble on because the setups are all the same. But if you have any suggestions on what I could do or cover, please let me know. And I will see what I could do to accommodate. If you have any questions about these indicators, let me know. I could answer them or answer anything you have. There's also, I'll put links in the description box below, sorry, to where you can purchase those indicators at a discounted price from Simpler. And you can get a pretty good deal that way. All right, so that's it. Enjoy the rest of your weekend and stay safe.